Hey everybody, I'm here today to tell you about 5 important rules of money. These rules of money will give you a better handle on your finances. So let's get right to it. The first rule of money that I want to talk about is the 50-30-20 rule. So 50-30-20 basically describes the percentages that you should allocate to certain things from your income. So you have 100% of your income, and 50% of your income should be devoted to necessities. Things like your housing costs, things like your bills, and so forth. 30% of your income should be devoted to your financial goals. Things like your retirement fund, paying off a student loan, paying off credit card debt, and so forth. 20% of your income should be devoted to your wants. Things like entertainment, things like vacations, and things of those natures. So the 50-30-20 rule basically tells you how you should take 100% of your income and break it up into various percentages. So that's the first rule of money that I wanted to talk about. The second rule of money that I want to talk about is the 24-10 rule. Now the 24-10 rule basically tells you about buying a vehicle and what you should be doing. So 20 stands for the percentage of your down payment. So if you're buying a new vehicle, you should be putting 20% of the cost of the vehicle as a down payment. You should be putting 20% down. The 4 is the financing term. You should be financing the vehicle for a maximum of 4 years. And the 10 is the percentage of your income that should be devoted to transportation costs. So 10% of your income as a maximum should be devoted to all of your transportation costs. So the 24-10 rule tells you about buying a new vehicle and what you should do to maximize your financial opportunity when buying that vehicle. The next rule that I want to talk about is the 10-year rule for buying a vehicle. So basically the 10-year rule is designed to protect you against massive depreciation. It basically says that you should buy a vehicle either used, or if you buy it new, you have to keep it for 10 years. Now, the way that it works is like this. If you buy a vehicle used, then you should be the significant amount of depreciation will have already happened. If you buy a car that's 3 years old, it will have already depreciated a huge amount. If you buy a car brand new and you keep it for 10 years, then you will not suffer from the depreciation because you'll be sort of riding it out for the entire 10 years and you won't get hit with as much depreciation in a short period of time. You're going to maximize the value of that depreciation that you're suffering. The fourth rule of money that I want to talk about is the 20% rule for buying a house. Now, when you go to buy a house, you should be putting a down payment down on the house. And the 20% rule basically says that you should be putting 20% of the value of the house down as a down payment. And what that does is that sort of protects you from potentially buying a house that you can't afford. Can you buy a house that is super expensive, put 20% down, have very little income, and you still can't afford the house? Of course. But if you put 20% down, there's a smaller chance that you're going to be able to buy a house that you can't afford. So the 20% rule for buying a house is just designed to try and keep you in a price range that you can more than likely afford, okay? But once again, you have to look at the numbers and you have to decide whether or not you can actually afford the house based on your numbers of income and so forth. And last but not least, the fifth rule of money that I want to talk about is the 6-month emergency fund rule. Now, what that is basically says that at any given moment, you should have at least 6 months of savings in your emergency fund. And those funds should not be touched unless there's an absolute emergency. So with that being said, that is designed to protect you from a financial catastrophe, from getting into massive amounts of debt because you can't make your payments. So you should always have at least 6 months of savings in an emergency fund. And if you want to be even more prepared, you can have 12 months or even 18 months worth of savings. But that's basically it. Now, these are 5 rules of money, and at the end of the day, they're just guidelines for money. Some people are very wealthy and have done well for themselves financially without following these rules. And some people follow all of these rules and they still end up being broke. So at the end of the day, it's in your hands and it's up to you. These are guidelines and you can adjust them according to your specific needs and your specific financial goals. But with that being said, try to work with them and adjust them to meet your own financial needs. And that's basically it. I really hope that you have enjoyed this video. Let me know what you think about these financial goals, about these rules of money in the comment section down below. And give this video a thumbs up if you liked it. And be sure to subscribe for more great videos just like this one. And that's all I have for you today. Thanks for watching.